The year 2026 is not just another date on the calendar. It is the year when the hidden machinery of global debt markets threatens to unravel. For decades, governments, banks, and corporations have played a dangerous game with borrowed money. They have built a financial empire on promises they cannot keep. And now, the cracks are widening. The collapse is not sudden. It has been engineered slowly, invisibly, and deliberately. Debt markets are the shadow stage where the real drama of money unfolds. Most people believe stock markets measure prosperity. But the true power lies in debt markets, where trillions move silently every day. Here, governments auction their survival, corporations gamble their futures, and banks recycle promises into profit. The story begins centuries ago, when sovereign debt became the lifeblood of empires. Kings borrowed from merchants to fund wars. Merchants demanded repayment in influence, not just gold. Debt became a weapon, a tool of control, and a hidden currency of power. By the 20th century, debt markets had evolved into a global system. The United States, after World War II, positioned the dollar as the backbone of international finance. Treasury bonds became the safe haven, the anchor of trust. But safety was an illusion. Every bond was a promise backed not by wealth, but by future debt. Fractional banking amplified the illusion, creating money from nothing. Central banks became the architects of this invisible empire. They printed liquidity, bought debt, and recycled risk. The system thrived on expansion, but expansion has limits. By the 1980s, financial deregulation unleashed a new era of debt-driven speculation. Derivatives multiplied risk across borders. Debt was no longer a burden. It was a product to be sold, traded, and weaponized. The 2008 crisis was the first great warning. Mortgage-backed securities collapsed, exposing the fragility of debt markets. Governments responded not by fixing the system, but by inflating it further. Central banks slashed rates, printed trillions, and doubled down on debt. The illusion survived, but the foundation weakened. By the 2020s, global debt had surpassed $300 trillion. Every nation was drowning, yet pretending to swim. Debt markets became the hidden vault where money laundering reached unprecedented scale. Governments borrowed endlessly, corporations refinanced endlessly, and banks profited endlessly. But every cycle of borrowing pushed the system closer to collapse. The warning signs are everywhere. Bond yields swing violently, signaling distrust. Credit default swaps spike, hinting at hidden panic. Emerging markets buckle under dollar-denominated debt. And yet, mainstream headlines barely whisper the truth. The collapse of 2026 is not a single event, it is a chain reaction. It begins with sovereign defaults. Nations unable to roll over debt will face sudden insolvency. Investors will flee, currencies will crumble, and central banks will scramble. The second stage is corporate implosion. Companies addicted to cheap borrowing will face refinancing at impossible rates. Defaults will spread like wildfire across industries. The third stage is banking contagion. Banks holding toxic debt will face liquidity crises. Confidence will evaporate, and the dominoes will fall. The final stage is systemic paralysis. Debt markets will freeze. Governments will panic, and the illusion of endless borrowing will shatter. This collapse is hidden because it is slow, silent, and disguised as normal market behavior. But beneath the surface, the numbers tell the story. Global debt to GDP ratios are unsustainable. Interest payments consume national budgets. And every attempt to fix the system only deepens the trap. Central banks will try their old tricks: rate cuts, quantitative easing, emergency bailouts. But these are bandages on a wound that cannot heal. The collapse is structural, not cyclical. It is the inevitable consequence of building prosperity on borrowed time. History repeats itself. The 1929 crash was preceded by reckless speculation. The 2008 crisis was preceded by reckless lending. The 2026 collapse is preceded by reckless debt expansion. The pattern is clear. Every empire falls when its debts outweigh its promises. And today, the entire global system is the empire at risk. Modern parallels are chilling. China's shadow banking system hides trillions in unreported loans. The United States faces unsustainable deficits, with interest payments rivaling defense spending. Europe struggles with sovereign debt crises that never truly ended. Emerging markets are trapped in dollar dependency, unable to escape the cycle. The data is shocking, but the silence is louder. Financial elites know the collapse is coming. They prepare quietly, while the public remains distracted. The fallout will not be evenly distributed. Wealth will consolidate further into the hands of those who understand the system. Ordinary citizens will face inflation, unemployment, and shattered savings. Debt markets will reveal their true nature, not as engines of prosperity, but as instruments of control. The collapse of 2026 is not just financial. It is political, social, and cultural. It will redefine trust, power, and survival. And it will expose the greatest secret of modern finance, that money itself has been nothing more than debt all along.